Amazon stock analysis in a few minutes time. Part 1, the technicals. After dropping more than 15% from the most recent earnings report, Amazon broke a major support level at $100 a share. And as you can see by the charts, that support had 3 occurrences where it acted as support. Amazon stock traded in a tight consolidation range from 2018 to 2020. In my opinion, somewhere in that range is going to be the next support. I see $80 being that next level based on these 2 events. Part 2, the story. Amazon as a company might have been the biggest beneficiary from the pandemic. So comparisons are going to be tough year over year, and therefore growth and profits will look less appealing. An upcoming recession would also slow growth. If consumers have less discretionary income, they are going to purchase less non-essential items. And Amazon sells both essential and non-essential products. Part 3, the valuation. Amazon is one of the largest companies in the world, having a market cap of around $1.23 trillion. The company is still seeing decent revenue growth, coming in at 14% year over year in this quarter. Albeit when we see 8% inflation, 14% is not a lot because it's being eaten up by inflation. Based on Seeking Alpha's valuation metrics, Amazon gets a grade of a D-. This stock is definitely not cheap when using traditional valuation multiples. It is barely profitable, posting a quarterly earnings per share of 28 cents for the quarter. And therefore, it trades at a very high price to earnings multiple or price to earnings ratio. For the trailing 12 months, it's at 98. And forward looking, it's in the thousands. However, free cash flow is strong for Amazon, coming in at over $21 billion for the quarter. So it appears that Amazon is trading at a premium based on those multiples. This is probably due to the quality of the business and the growth engine in AWS. AWS is their cloud service, and the cloud market is growing at a great rate, and a lot of spending is going to occur in the cloud market moving forward. Now, AWS grew revenue 27% year over year. That's less than the growth rate of the past, where it was above 30%. The bigger issue and why we're seeing such a big drop following earnings is the operating profit from AWS. That grew 10% year over year, which is far less than the revenue growth year over year. That would suggest that margins are contracting in that cloud business. And this for sure is a data point that needs to reverse if Amazon stock wants to go higher. Because if AWS continues to grow profits by 10%, then the ongoing losses in Amazon's retail business will sooner or later make Amazon's profits go to zero. So without a doubt, the most recent quarterly earnings showing a decline in growth in revenue and a steep drop in operating margins for AWS leaves a huge cloud over the AWS growth story on Amazon stock, and that's why it trades at a premium today. Part 4, the conclusion. Because of the current high valuation on Amazon stock and the cloud hanging over the AWS growth story, this stock feels better served as a trade for right now. I'd wait for a double bottom on the daily chart or for the stock to hit $80 before jumping in. For investment purposes, my gut says that AWS will reverse course and revenue growth will jump up again and that operating margin will increase. But I would wait for some kind of data, maybe the next earnings, to support that feeling. If that signal comes, expect Amazon to rally hard. Now, those are my personal opinions. Comment down below on your analysis of Amazon stock and join the Patreon for live trade alert. Here are some trade examples from the last 2 months where we posted more than 200% returns. A link to join is in the bio. Hit that follow and I'll see you on the next video.